Good morning. You're watching All You Need to Know on Bloomberg Quint. I'm Darshan Mehta. Let's take a look at what's happening as far as the global markets are concerned. Most of the US markets ended with a positive bias. If you're looking at the European market, that also ended with a positive bias. But there seems to be a little bit of weakness as far as Asia is concerned. The Nikkei is down in trade currently. You're having the Shanghai, which is up, which is marginally flat in trade. And the SGX Nifty has managed to recover from the lows of the day, but yet still trading with a marginal negative bias. But nevertheless, the trend seems to be on the better side as far as the SGX Nifty is concerned. Now, ADRs, Tata Motors reacted positively to the big move that we saw in trade yesterday in India. Vedanta, Wipro and Dr. Reddy's also managed to inch up. The only big negative that was there, that was on account of Infosys, which was down almost 3% following what happened as far as the Indian markets are concerned, reacting to the CFO's resignation. Now, how did the indices pan out in trade? The Nifty was up 0.7%. Outperformance was seen by the mid-cap index. The small-cap index was rather flat in trade. It was up just 23 points or close to just 0.1%. What did well was the Nifty Bank Index, and the PSU Banking Index has continued to do well. It was up another 2% after the big move that we saw in Friday. Now, some of the sectors that were buzzing in trade, the infrastructure, metal and energy. So the high beta seems to be actually buzzing in trade over the past few days. As far as this month is concerned, the pharma index is up 7%. FMCG and metal are the other two counters which have managed to inch up significantly in trade. What hasn't done well is pretty much all the sectors have done well. There's none of the sectors ended with a negative bias. Flows, FIs were sellers, DIs were buyers in the market. So that's the trend that we're seeing as far as the fund flows are concerned. But basically, Reliance, L&T contributed. L&T because of the buyback, and after a while, the HDFC Twin seems to be contributing. If it was not for Infosys, the Nifty would have been up over 100 points in trade. Now, how did the F&O market pan out in trade? Fresh buying was seen on the Nifty. If you're looking at it, open interest build-up was 1.5% on the long side. Similar was the case with the Nifty Bank. Open interest build-up of 0.5% on the long side. Now, where are positions taken since the market moved up yesterday significantly? Put writers became very active at 11,500 and 11,600, forcing unwinding of positions on the 11,500 and 11,600 for all the call writers, because premiums went up through the roof. What we are seeing is that even at 11,600, positions are being taken by put writers. Now, if you're looking at the total open interest in trade currently, you're seeing that 11,500 is the big support level that the market is playing at this point of time, but there will be resistance at the 11,600 mark. If that is taken by force, you could see much more short covering that will come in. The shorters will be squeezed at this point of time. Now, in terms of the stock in the F&O ban is concerned, Adani Power, Jain Irrigation and Raymond continue to be in the F&O ban. Two stocks that come out are Adani Enterprises and Jet Airways. These counters come out of the F&O ban. The Nifty PCR moved up, the Nifty Bank PCR moved up, given the fact that put writers are much more aggressive in the market than the call writers. As far as four stocks are concerned, the first stock I want to talk about is DV's Lab, moved up on high open interest bid up of 21%. Stock trading at lifetime high. The rally probably will continue. The other counter I want to speak about is Amara Raja, managed to spike in the second half of trade. Open interest build up of 18% on the long side. Probably rally will continue. X-side anyway is doing well. You have the other counter is TVS Motors. Two-wheelers has impacted well in trade yesterday. A big block deal that happened in trade yesterday, and 11% open interest build up on the long side. The momentum probably will continue. And because of the Kerala flood impact, Federal Bank saw open interest build up of 15%. That too on the short side. So there is weakness that is seen on this counter. But that's what we've seen as far as the domestic market is concerned. Let's go across to Bloomberg's Rosalind Chin for all the top international headlines.
BlackRock says it saw a significant second quarter slowdown in China's economy after analyzing a wide range of data. The fund manager's CIO of Systematic Active Equities told Bloomberg the pullback was more visible in alternative data rather than the government's official readings. Jeff Shen says the trade dispute with Washington has weighed on sentiment, but the data now shows some stabilization.
Maybe the conclusion here a bit by looking at these three charts is really that overall fundamentals seem to be not bad. I mean, slowing down a bit, but it's not that bad. Sentiment, on the other hand, certainly has been quite negative, whether it's domestic Chinese companies in the second quarter or how global companies think about China. And but there's some green shoot at the end of July and the beginning of August.
Worldwide sales of electric cars cracked the 400,000 barrier in the second quarter, rising 77% from a year earlier. Bloomberg New Energy Finance says 411,000 vehicles found new homes, more than half of those sales coming in China. Europe accounted for 22% of deliveries, with North America on 19%. Kansai Electric has delayed the restart of the Takahama No. 4 nuclear reactor after a leak was discovered in thermometer piping. The leak was just steam and there was no impact on the environment. An investigation is underway and no timeline has been given for firing up the reactor. The unit's been in planned maintenance since May and was scheduled to begin producing power on Friday. Waters have begun to recede in Kerala after the southern Indian state's worst floods in a century. However, some areas remain inaccessible to rescue teams and nearly 1 million people are in refugee camps. 341 people are known to have died since the monsoon began in June. Kerala received 160% more rain than normal in the first 19 days of this month. The fear now is disease from contaminated water. Global news 24 hours a day on air and at TikTok on Twitter, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rosalind Chin. This is Bloomberg.
Pretty much all the markets across the board are all focusing on the Chinese trade talks as well as the NAFTA talks. Last week we've seen a little bit of slide in oil due to the large increase in the stocks, slowing U.S. demand. However, you're still seeing record U.S. refinery output. What is a positive inkling for U.S. oil is there's still that discount to Brent supporting cheaper oil, expected to see a little bit more oil exports. There's still the Chinese talks that are going back and forth. However, I think that the Chinese talks are going to be offset because China is still buying Iranian oil. That's something that there's not many people talking a lot about. If they continue to buy U.S. oil, they're going to be hit with more sanctions, and that could determine a lot of different outcomes with the trade war talks. So we're going to see how that plays out in the near term. But the U.S. rig count is still holding steady at 869. That's still the highest rig count since 2015. There's a huge net long speculation in the market that should restrict any fresh buying. It's going to be vulnerable to stop losses around that 65 level. If we can't hold that 65 level, you're going to see that spike lower with the stop losses incurred, short covering, and we could test around that 60 level.
60 level. Wow. All right. Right now we're at a 66 plus handle. Talk to us about copper, Scott. What does this all mean for copper? Is that also dependent on the outcome of these talks?
Yeah, in the copper market in particular, we traded on a low yesterday with a very heavy volume on Friday. So if the open interest is at a low since July, that equals it's a very low demand. That has to do with a lot of the Chinese economic issues that they're going through. Supply concerns are declining with the labor issues in Chile. So that was a little bit of a bullish catalyst. Hopefully that's going to be resolved. Stocks in Shanghai, 7th straight week of declines. So that is demand in China is still strong, but their supply is being met. So we're going to see how that plays. The Chinese talks, they're going to cause short covering around 270 is a resistance. We need to break that 270 level to continue any upside momentum.
On to Indian equity markets. Talk of the day is Vadilal Industries, where we have Ashish Kacholia, the ace investor, which has sold in 5.04% stake in the company for a consideration of around 22 odd crore at a price of 611 per share at an average, which indicates a premium of 4% as compared to previous day closing price on BSE. Earlier, as per the shareholding pattern, as per June 2018, Ashish Kacholia held more than 7% stake in the counter. Interestingly, who has checked into the fund is EQ India Porunju, which has bought in 0.67% stake for at a price of around 590.24 share, which is currently around that current market price, previous closing price. The stake has been purchased at a consideration for 48 lakhs, so 0.67% stake overall has been purchased in. If you look at the shareholding pattern, promoter shareholding stands at 64.7%, while public shareholding stands at around 35.3% for this counter. If you look at the financials, it has been a fairly decent show for the company, where from FY14 onwards to FY18, the revenues have actually kind of doubled from 300 kind of level to around 550 odd crore. In Q1 FY19 alone, in terms of the top line growth, 216 crore has been delivered. If you look at the EBITDA performance for the company, that also trend has been moving uptick. For FY18 overall, an EBITDA of around 54 crore had been done, and in Q1 FY19, it was roughly around that 58 crore kind of a figure. Well, about this company, it's an 11-year-old ice cream brand which has a deep domestic distribution presence and also growing presence in US markets thrust towards premiumization. Let's look at the stock performance. However, in the last 5 days, we have seen the stock sliding more than 20% year-to-date basis. The decline is around that 40% level, and over a year basis, we have seen the stock slipping by more than 30%.
Shifting focus to currency markets, the rupee yesterday, along with other Asian currencies, strengthened versus US dollar on optimism that trade tensions between US and China will ease after planned talks, which is due this week. Rupee yesterday rebounded from its all-time low and ended 33 paise higher at 69.83 levels against the dollar. Remember, the home unit gained 0.8% intraday, the most since 25th May. If you see bond markets, sovereign bonds also gained yesterday as 10-year benchmark bond yield dropped nearly 2 basis points to end at 7.84%. On the global front, dollar index weakened past the 96 mark, and it now trades lower for the 5th consecutive session. It trades near 95.5 mark. The dollar slipped against major currencies yesterday after US President Donald Trump complained about Fed's decision to raise interest rates. That apart, President Trump also accused China and Europe of manipulating their currencies. Now, despite that, we have seen euro picking up versus dollar. It ended nearly 0.4% higher versus the greenback. Traders now turn their attention to this week's main events, that is FOMC minutes, which is scheduled for tomorrow, and Jackson Hole Symposium later this week. And lastly, speaking of dollar rupee now, it is trading at 69.76 levels against the dollar in the non-deliverable forward markets, which indicates a flat to positive opening for Indian rupee in today's trade.
Amongst the stocks that we are tracking in trade today is Goa Carbon, which has said that they filed an application to the Supreme Court to include calcination process along with aluminium for exemption with respect to the pet coke import ban that recently came in. So watch out for that name. As also for FTC Limited, they've received 8 observations under Form 483 for their Aurangabad unit, and this is from the US FDA, and this is to do with their ophthalmologic products that they supply to the US markets. So some negative development or reaction likely there. You also have Max Ventures, which will be in focus on the back of a ET report which says that its realty Max Estate is looking to invest 1,500 crores in office realty. In fact, what they've also said, or what the report also says, is that the Max Estates, that is the arm, will borrow about 770 crores over a 3-year period for the project. So watch out for this name. Also, a couple of interesting bulk deals. First is Team Lease Services, where Gaja Capital Fund India and GP India together sold about 3.7% stake in the company, which was worth about 148 crores. Remember, earlier in April also they had offloaded about 4% stake or so. Buyers include Franklin Templeton, which picked up 2.8% stake, and Kuwait Investment Authority, which picked up about 0.5% stake. In bulk deals, next on the list, what we have is Newgen Software, where Malabar India Fund has picked up 1.41% stake. The seller is Birla Sun Life Mutual Fund. The stock already ended about 3.6% higher. Let's see if that reacts on the back of these names. But those are the stocks that you need to watch out for.
Despite the end of tourist season in India, the passenger growth for the domestic market in the aviation industry was very strong. The passenger growth compared to last year was close to 21%. That is the higher than the passenger growth seen in the holiday month of May 2018. And this is on the back of capacity addition and lower fares seen in the aviation industry. Now, this strong growth in passenger growth was led by Indigo, that is the market leader. And for Indigo, the passenger growth was close to 31.5%. That is the highest passenger growth reported by the company in the since Jan 2017. And in Jan 2017, the company had reported a passenger growth rate of 40%. Now, if you see For other players than Indigo, the passenger growth rate remained weak for these players. For Air India, the passenger growth rate was only 10.7%, and this has declined for the 4th consecutive month for Air India. For Jet Airways, the passenger growth was 4.2%. Now, this is higher compared to last month, but it is way below the industry rate of 21%. For SpiceJet, the passenger growth rate was 5.1%. Now, this is the lowest ever passenger growth rate reported by SpiceJet in the last 33 months, and this is because of lower capacity addition and because of competition that the company has been seeing on its routes. Now, if you see the passenger load factor, now that has increased for all the major operators compared to last month. For Air India, it has increased to 82.3%. For Jet Airways, it has increased to nearly 84%. For Indigo, it has increased to 88.7%, and for SpiceJet, it has marginally increased to 93.8%. This is also the 39th consecutive month where SpiceJet has been able to report a 90% plus passenger load factor, that is also known as the capacity utilization. Now, on the market share front, if you see, Indigo's market share has increased to 42% and has strengthened its market share compared to last month where it was 41.3%. For all the other major operators, that is Air India, Jet Group and SpiceJet, the market share has more or less remained stable compared to last month. Now, on the operational side, if you see, for Indigo's flight cancellation rate, now that has come down to 0.09%. This is the lowest flight cancellation rate reported by the company in the last 28 months, and this clearly shows that the engine issues are not done for Indigo.
The government may ask state-owned entities to park their non-core assets into a special purpose vehicle for monetization. The Finance Ministry is currently working on an institutional framework which would require public sector enterprises to park their assets, primarily non-core assets, into a special purpose vehicle for monetization. The government would not only nudge the asset-heavy public sector enterprises to monetize their assets, but this policy would also pave the way for strategic disinvestments which are currently stuck. The current guidelines for strategic disinvestment require public sector enterprises to carve out their land holdings or non-core assets into an SPV, but does not suggest the way forward. Once this policy is put in place, the government expects closure of many strategic disinvestments which are not happening as of now or which are currently stuck. The government is also expected to rope in an external agency which would help it in identifying non-core assets that could be monetized, and the criteria has not been decided by the government yet. The government expects to rope in, the government may rope in Niti Aayog to help the divestment department in identifying these non-core assets which could be monetized in future.
We have things like shelter boxes and all, which is designed by Rotary International. Already one consignment of 200 shelter boxes have been shipped from Calcutta. These are very sturdy boxes which contain everything that one household may require to start their life there. Things like a tarpaulin, tent, mosquito net, containers, lot, everything in one big metal trunk. So it's a long-drawn plan which we have, and we are going to sit with the administration also maybe in a couple of days' time.
The rain stopped, where people trying to go back to the houses, where they found that no sewage has mixed with the drinking water because of the stagnant of water, maybe malaria, all kind of dengue, all kind of such diseases. Maybe we have to be proactive.
We are looking for chlorination tablets, for instance, to purify water. Because a lot of people, a lot of the wells in all of these places have been entirely contaminated. So before we can use any of this water, we can't keep depending on people sending in bottled water from places. So when we start using well water, we want to be completely sure that it is safe. We're also looking to clean these places completely. In fact, volunteers have been signing up to clean these houses and areas thoroughly before we allow people to go back home.
0.6 million people are now in the relief camps. There are around 3,446 relief camps across the state because their houses have been completely destroyed and the roads are completely devastated. We have to first concentrate on rebuilding the homes, that too disaster-resistant homes we have to think of rebuilding, and then only we will be able to shift them back to safety.
Brought Kochi back to the air map. A lot of hard work has gone in by all the stakeholders, whether you call it the state administration, the Cochin municipality, then AAI people came, the CISF, the Air India people, all the flights which we can accommodate, that is, the size of the aircraft cannot be more than a Boeing 737 because of the restricted length of the runway at Kochi. So the only problem which we are facing is the runway shortage and all the infrastructure for handling passengers. But in emergency, it is being done.
Several stories that are currently on the website bloombergquint.com. Of course, you'll find all the live market action as well over the course of the day, so do tune in. As of now, if you log on, you'll find a few stories. Here they are. WhatsApp Chief Executive Officer Chris Daniels is visiting India this week and is likely to meet Union Electronics and Information Technology Minister Ravi Shankar Prasad as the company attempts to address concerns around fake news on its messaging platform. Apple has pulled thousands of gambling applications from its Chinese store after the nation's state-run broadcaster accused it of taking too long to clean up banned content. And news reports suggest that the official launch of the India Post Payments Bank is around the corner. This comes on the back of pilot projects that have been underway in Raipur and Ranchi since January 2017. The initial plan is to open 650 branches that will cover almost all the districts of the country. That's all you need to know going into trade today. Do stay tuned though. Up next on Bloomberg Quint is Indian Open.